Okay, and do I pause my YouTube?
Pause the YouTube.
Okay, cool. Okay, and do I pause my YouTube?
Pause the YouTube.
Okay. Okay, here's the live stream.
Perfect.
Cool. Okay, so let's give it 5 minutes for people to start joining and then we can begin.
Perfect.
Cool. Hey guys. So I think we're good to go. We're seeing some people. We can begin our Q&A.
Perfect. Excellent.
Cool. All right. Yep, we have a few people here and there. Excellent. We have someone from Portugal. That's great. We have Malthus. How are you? Perfect. All right, let's do it. So yeah, first of all, guys, thank you so much for posting your questions. Unfortunately, we won't be able to get to every question, but what we did was take thematic focus of what seems to be the most prevalent questions, and we're going to go through them. It seems it's all about, it's about corporate governance, share structures, roadmaps. So yeah, let's step right in. If you want, Oscar.
Absolutely. Well, first, I want to thank our shareholders and the public in general that are watching this. We take this responsibility as an honor and a privilege, and we take it very seriously. So welcome all. Thank you for your trust. And absolutely, let's begin. So Alex, we're just going to have a conversation here in front of all our shareholders and the general public, about the questions, and we'll go from there. So the first question that we received, or the first question we established was important, was when can we expect the release of the platforms and the white papers? And maybe Alejandro, you're the better person to talk about this.
Yeah, for sure. So, well, the good news is that our white paper is getting a lot more ambitious than originally anticipated. We're going to be talking about that as this interview progresses. So we're building everything from a bespoke real estate tokenization exchange all the way to a PMS. And, in light of all that, we will be releasing the roadmap in the very near future of Q4. But yeah, along with the platforms, what we're going to do with the platforms, both Metro House and Metro Crowd, is in Q4, we're going to invite our investors and our early adopters who want to participate in a private and semi-public beta so that we iron out, all the kinks within the platform and get the best UX so that we can do an optimal release early Q1 of 2022. So when I say release, I mean go to market in this particular case.
Exactly, commercial ready version.
Mm-hmm. Yeah, but we want to invite everyone that wants to participate as early adopters, as early users, as investors into both platforms so that they can help us and become a part of this journey with us.
Fantastic. So another question, and then we're starting to get into some of the issues that I know are concerning shareholders. We can just start stepping right into that. So how much of a priority do you feel cleaning up the balance sheet is for the long-term valuation of the company? So, I mean, this may be obvious to some, not quite so obvious to others, right? But a positive balance sheet is really what's weighing down on our current valuation. I mean, anything that you can talk about as far as dilution is only a function of a negative balance sheet. Also, it's very difficult to attract long-term institutional investors or even wealthy individuals that are looking to take a long-term position in the company unless we have a positive balance sheet. This is just one of the first things that any basic investor looks at. Another thing that really affects our business is that we are now, because we're getting rid of all this toxic debt, in a very, very, I'd say, organized manner, as considering that we're arm's length with our investors. I think we have a good plan. But as we've progressed, we have now access to cheaper strategic financing. We no longer have to rely solely on convertible debt. Thank God that's way in our rearview mirror now. Case in point was the Brazos Atrium building in Houston. We got an incredibly market competitive mortgage for that building. It was actually surprising, and that probably would not have been possible just a few months ago rather. So it affects our valuation dramatically. It affects our way, our operating, the way we operate the business, and it affects the cost of capital. So it's a very big deal, and that's why we decided to do the Band-Aid sort of tactic here. We could have prolonged this and staged it out one way or another, over months and years. But I think we have too much good things coming up in our business plan for us to delay the inevitable anyway. And we're seeing the positive results. I mean, we know, like, again, the valuation is being hurt because of the debt. It's not the dilution. I mean, we just can't attract big investors, important investors, until we sort this out. And that's why we're going to do this very quickly, not going to, organized, in a serious manner, but we're not gonna drag this out. It just does not make any sense. The second question, sort of talking about the same thing, is, and I know it's very important. Again, I want to make sure that everybody understands that we understand the concern. We're not downplaying this, but we have, as managers, Alejandro and I have very tough decisions to make, and the decision again is let's get rid of this, right? So the second question is there an update on the company's balance sheet? How will there be further dilution, and if so, for how much longer? So we're now finalizing our third quarter financial statements. Frankly, until we have that, we can't give an exact assessment. But I can tell you that our third quarter financials are going to be dramatically better than our second quarter financials as far as how much debt we have still in our books. It's again, it's going to be well over 75 reduction in just 8-9 months since the first quarter of this year. And I can tell you that when we have an exact number, it'll be obviously be in our filings, but we are definitely in the tail end of this. This is not something that's going to continue to drag for much longer. It's just not. It's actually worked out. Yeah, go ahead, Ali.
So to that point, this is something that you feel will be finalized this quarter?
Yes. I mean, it's a little up to me. It's a little, I don't want to say irresponsible. I don't want to offer exact dates or amounts because it's also a function of our stock price, right? So if the stock were higher, it would be dilution. If it's lower, it's more dilution. So I want to be responsible in how I handle that question, right? But yes, I'm very confident that the first few weeks of fourth quarter, we'll have this in the rear view of our car.
Right, and it's also important to note that none of the founding team derives a salary. We're not financial arbitrageurs, we're operators. And The idea is to invest in the fundamentals of our business and executing on our highly disruptive roadmap. It's not, making a quick buck or a swing trade. This is long-term, not get rich quick.
Exactly. I mean, not only are we not taking salaries, Alejandro, you and I are big investors in the company. I mean,
We're huge investors in the company.
yes, you, for example, and I've expressed this privately, how appreciative I am of your attitude with the company. We had a few, let's say about a year ago, we probably started talking about this. And it was just, hey, listen, this is what we want to do, and can you provide a service for us for a price? And that evolved very quickly into full-blown partnership and a very long-term partnership, because the investments that you put into this company in time, resources, money, same thing as for me. It's obviously, it's obvious that we're doing this for the long term. So, we're in this all the way, and in our case, we're just simply not going to stop until we reach what we know we can do here.
Right. Absolutely. Absolutely. So then the next question pivots into, well, it's kind of similar, but, we want to make sure that all these questions that have been lingering for the past weeks and months are addressed, and any further questions we can lump into our Thursday thoughts. And we'll be doing it's important to note that we'll be improving our comms drastically with our investors and our early adopters. So we'll be piloting new strategies. I think you guys will enjoy it. So for the foreseeable future, are there any plans for a reverse split, reverse merger, spin-off of any of the divisions, buybacks, or any buybacks of the company's stock?
Okay, so a reverse merger, a reverse stock split is not even part of our conversation. And you know this, Alejandro, we spoke about this. Having said that, there are two types of reverse splits. I mean, there's one that you would do prior to an uplisting to a higher market. Obviously, that's something that we're going to need to consider maybe at one point or another. And then there's the second one, which is to use colloquial terms, to rinse and repeat, meaning reverse the stock and then start issuing new shares to pay down debt. We will simply never do the latter. That's not going to happen. We have no plans for that, and we have just too many other alternatives, and it's just not going to happen, plain and simple. Reverse merger, absolutely not. I mean, why would we give up control of our company right when we're, when we're in the best part of this, of taking off the spaceship? It just doesn't make any sense. Having said that, if some crazy opportunity like $1 billion company came to us, I mean, we will consider it as responsible managers. But I mean, you and I are just way too excited in our entire team about what we're doing to just give up the company and give control to somebody else. So absolutely not. We're not.
It's early days. It's early days.
It's early days. Exactly. Yeah. I mean, in fact, I see us moving, those that have done some research about me know that I've been deeply involved in real estate development, but not just that, also investment banking, M&A, and that sort of thing. So I think, investors should be thinking that we're going to be very proactively buying companies and other assets, as opposed to the other way around, anybody else buying us. Mm-hmm. One thing about the way we've executed our acquisitions, Alejandro, and we can talk about the first small, it's a small deal, but we love it, which is the Infinity View Villas. And then the second building that we bought, the Brazos Atrium, which, by the way, put us into EBITDA positive territory. Mm-hmm. We never announced LOIs. We never announced that we were under contract. We never announced any sort of interim agreement or give people some idea that something is coming. No, we were very responsible. We executed it, and then we announced it, because that's how we want to do things. We want to stay very firm in our communications. We want to act, and that's the kind of attitude that we have internally. And it's important that our investors and general public view that's the way that we do things. The buybacks, it also doesn't make sense. I mean, buybacks are what companies do when they're many years mature. You can talk about Microsoft maybe doing a buyback, maybe Apple. But we have such a high ROI with our money investing in our own projects than we would buying our stock. For example, case in point, and I keep talking about this building because I'm not sure if we conveyed enough how important this, what a shift in paradigm this was in our company. But the Brazos Atrium cost us in equity just less than $500,000. That put the company into EBITDA positive. I mean, how many OTC companies 8-9 months into the business can say that? Not very many, And what would $500,000 have gotten us if we started buying back? Not much. It would have done nothing for us. But instead, we're positive. We're EBITDA positive.
Yeah, again,
And again, we
a swing trade. This is a situation where we're not Apple. We're not at the maturing stages of our business life cycle. We're at the growth stage. So right now, what we do with free cash flows is invest in our business, invest in our technology, invest in our asset pool, and really growing the fundamentals of our business so that we have a viable company down the road, a growth company, high growth company that will correlate with a much higher return on investment for our investors.
exactly. I mean, we're in hyper growth, really. And you know, and again, I'll keep using this term. I do not want to be dismissive of this. I understand this is important, and it does weigh down on people's psychological, thinking of the company. But we're not a technical trade. Those that are waiting for us to announce, that we stopped diluting the company, or that we're going to do this, or we're going to do that. I mean, those are just fancy technical things that people do to try to increase their stock when they have nothing better to do. I mean, the investors that we're trying to bring in are not people that are looking for technical trade. These are people that understand that we are disrupting an entire $280 trillion industry. For just examples that you and I were talking about, nobody invested in Apple, Tesla, Netflix, and all these amazing companies because they were a good technical trade. They invested in these companies because they were disrupting entire businesses. They were creating new industries. And that's exactly what we're doing. I mean, that's what you and I are doing, Alejandro, and our entire team. And I'm not singling out anybody.
Agreed.
Just saying you and I because we're on the call, but it's exciting what we're doing. It's people are going to look back at this moment in real estate and say, wow, this was like the Amazon, back in the early 90s, mid 90s with e-commerce. That's just exactly what's going to happen.
Yeah.
I think, Alejandro, like in a few years, we're going to look back on financing for real estate, and nothing's going to look the same. I mean, REITs are going to have they're going to have a lot to think about as to whether they need to go to capital markets or tokenization to raise money. The kind of yeah. I mean, we're entering tokenization, according to a publication that we posted, could be a $1.4 trillion industry in just 3, 4, 5 years. 80% of that is disruptive. And what I love about our team, Alejandro, is that we have that rare mix of people that have proven their ability to create viral blockchain strategies. You've done that in the past, and I have a very strong record in real estate. So bringing those two together is going to make the difference. That's what I think is exciting about what we're doing.
Yeah. No, agreed. And that segues nicely into the next question that our team selected. Based on your feedback, which is, and when I say your feedback, I mean all of our investors and everyone on our Twitter. What plans does Metrospaces have to be disruptive in its industry, right? So in this case, prop tech as a whole. This is a good question, and we'll answer the how and the why we feel positioned. So how will we be disruptive? Disruptive is a term that gets thrown loosely. And we're not in a crowded market at all. We're in a market that is, real estate as an asset class, maybe over $300 trillion. Not many people playing in the tokenization space, even less able to execute, because they don't bring the convergence between technology, executing adequately on technology, understanding the way the secondaries markets work, and finding a quality offering in terms of real estate to tokenize. What we bring to the table is we're going to create a myriad of innovations in this field. One, we're tokenizing in a manner where we can actually track assets and investments and provide real-time pricing and liquidity. Number two, we're democratizing access. We don't shy away from a challenge. We do want to target US investors. We do want to target non-accredited investors as well. We want, the average investor to have access to investments and vehicles that were traditionally secluded or restricted to institutional investors with a very high liquidity threshold. Now, what we intend to do as well is provide, initially we'll start trading in the secondaries marketplaces, but then we'll provide our own exchange with a property management system where every investment, every asset can be tracked in real time. That also segues into Metro House, which is a play on what the future of work, what the future of recreation, and what the future of living and residing will look like. So in this case, we think that this can all be cumulative and affect cap rates positively, which in turn will be tokenized by packaging real estate, not the traditional route, but into a product. We don't think that developers and landlords post-COVID and even during COVID will continue to get away with exaggerated rentals for a walk-up with no amenities, right? In this case, we have the amenities, but we also want to create the community around it. We want to create these symbiotic relationships in work, in play, in living. We want to package that up and provide a compelling offering that is standardized across cities, across locations. So that's how we intend to
Alejandro,
oh, go on.
Sorry to interrupt you, but just a quick comment. Now that you're on the living, I mean, we talk so much about tokenization because it's just mind blowing about thinking about what we can do here and what's going to happen in the next 2, 3, 4, 5 years. But the co-living, I mean, this is not just some new segment. I mean, co-living is changing the entire way people rent rooms. I mean, it's going now for, I mean, who would rent a single room, up to now? People that have necessities, because it's really not a convenient setup, right? Not a convenient living setup. But now it's a choice of lifestyle because you're offering people, a social experience. You're offering people that are like-minded. You're offering people to live with people that have the same goals. You can choose the places that you want more amply. You know what you're getting into. You can break your contract, after a month. It's just that's huge. I mean, going from a necessity to a lifestyle choice. I mean, wow, that's powerful. And
Yeah,
again, we get so caught up in tokenization that we never really think about these things through on co-living, and that's unbelievable.
Yeah, no, and anyone with options isn't going to settle anymore. So now people want turnkey living. They want communal living in the best form of the expression, and they want a product. They no longer just want to fill a need. They want a need. They want they want a luxury. They want a service more than anything. So that ties in. Everything is cumulative, right? And everything gets tracked in the PMS. And we'll have our own proprietary exchange down the road. And we'll get into detail on that in the roadmap sections. So let's segue, since we're running a bit out of time, let's segue into the next section, which is, well, how will Metrospaces become $1 billion company? I think we already kind of talked about the how. Let's get into the why we feel positioned and primed to take this company to that valuation. So Oscar's track, and here's where, where we got to brag a little bit. So bear with us. Oscar's track record building the Bulgari Hotel, his track record in iBanking speaks for itself. In terms of Shockworks, the team, myself, we have experience in iBanking, very extensive experience in venture capital, in IP, but more importantly, in executing on billion-dollar projects in their own right. We've built over $2 billion projects in companies. We take ownership in every single company that we participate in. And we have an ecosystem of companies that add value to each other in a model that is comparable to YC, but we think we can extend that as well. So with Metrospaces, we've decided to really form a partnership in the true meaning of the word and dedicate as much of our resources as we're capable.
Excellent. Okay, the next question, what is the current team structure, including third-party vendors? And we can tie it into the following question, Alejandro. And is the current team here to stay? Will there be any more critical hires or partners?
Okay, so yeah, so this is a good question. And in this particular case, we've actually increased the engineering and design team to about 12 people. We've built out the executive team. We have Daniel, we have Oscar, we have Steven, we have myself, and now we have 2 vendors in areas that formerly we weren't as strong in, and now we've rebuilt. So digital marketing, PR, and comms in general to our investors. So we'll be looking into strengthening IR, and more importantly, we plan to triple staff size and retain staff size, which segues into our next question, by Q1 of next year. So is the team here to stay? Absolutely it is. And it's only going to grow stronger and more committed. And we're only going to increase to it. We're not, like I said, we're in growth mode. We're in hyper growth mode. We're not, invested in any financial engineering tactics or, any technical trades. We're looking to build this long-term. So our intention is to reward our early investors, our investors now, our early adopters, our user base now. And anyone who holds will be rewarded down the line. That we feel confident about.
That's our vow. That's our vow, Alejandro. You and I to our shareholders.
Yeah, and I personally would not have joined if that weren't the philosophy of the company. I can state that categorically.
I agree. I agree. So it's for me, like I said, it's incredibly grateful that you saw the same vision that I shared with you, about a year ago, and that we've been able to, not just my vision. I mean, you've taken it to a whole other level. You've maybe see aspects of this that I didn't see before. So I mean, the synergy has been just dramatic. It's been exciting to. I
And
mean, for the
great.
first time in many years, I wake up every day super excited about what we're doing, Alejandro. That's wow. That's powerful. That's passion. That's being able to do something that you're passionate about, and that's what we're doing here. That's fantastic.
Agreed. So over to our next question. In this case, we talked about the team. One thing that we didn't mention, and I want to kind of allude to, is there will be a lot more strategic partnerships coming along. We're not going to say any names. I know a lot of people like to look at the Shockworks, client and partner list, and there's a lot of speculation going around. However, we will be doing a lot in VR. We will be doing a lot in price gaming. We will be making announcements in the near future. But it all feeds into the ecosystem. We can drive revenue through Bitcoin mining in our properties. We can drive revenue by getting involved in the revenue drivers and rec spaces and price gaming, and then VR as a sales tool. So those are some areas we can allude to that we're highly targeting and anticipating through our strategic partnerships.
Exactly. So like I said, every day is a new adventure. It's a new dream that we can explode, and it's wonderful.
Yep, agreed. And people keep mentioning buybacks. We want to put the company in a position where, once we're fat and happy, we can buy back our stock. But for now, the plan is to grow.
Mm-hmm. And we'll see about that down the line. I mean, I think with the current, I really, believe it or not, I really like our current shareholder structure. I think it's going to lend itself to a lot of shareholder value increase. I think it would be silly to even think about that right now. Like I said, we're more focused on building this company out, and we're certain that as we pay down debt and dilution ends, and it will, but more importantly, paying down debt and then the most important, powerful thing, when we start rolling out our platforms and we start proving to people that our business model is working. I mean, that's we need to see that happen before we can even consider anything else about stock buybacks and just changing the general structure of our capital, the company's capital.
Agreed, 100%. So then this takes us to a very similar question, which is how will Metrospaces generate long-term value for shareholders? Oscar, do you want to tackle this from a governance, financial, and real estate perspective, and then I'll hit it with the tech part?
Absolutely, I'd love to.
Perfect.
So our partnership with you, and I'm going to touch back real quick on something that we said before, right? I mean, and I've seen some questions. I mean, why would a tech company use their balance sheet to buy assets? First of all, that we're doing that so we can prove the model ourselves, okay? And also because we think that it'll be a while before real estate as a whole, because they have so much access to capital, we'll really embrace the organization. So we're not going to sit and wait, for them to come. We're gonna do this. We're gonna use our own balance sheet. We're gonna push this thing forward. Our long-term shareholder plan is simply being one of the leaders in the space. I mean, we want nothing else than that, and we'll continue to and I don't want to say merge to give the wrong idea, but we'll continue to converge between Shockworks and us, and move forward. And yes, look, obviously everything that people are thinking, we have in mind. We want to list to how, I don't want to say particular listings, but you can all imagine those are the things that we want to do. But the long shareholder value is very basic. We need to have a very solid base, and that includes being debt free, being positive and EBITDA positive, which is where we're at, and continue to be that. And then every day, just realizing how quickly this business is changing, and be innovators. And that's what that's why you and I have always talked about being thought leaders. I mean, I think those three things, being a thought leader, clean balance sheet, and executing on our plan, is what's going to make this thing the dream that we have. I mean, that's how you build these companies, and speculating much more than about this or about that into the future is just it's silly. I think those three things are the pillars. We execute on those three things, Alejandro. There's no way we can't, there's nothing that will stop us. Simple as that.
Yeah, and that segues into the next question, which I'll lump into this one, is can we, how do we generate long-term shareholder value, and how does that tie into the Shockworks partnership? Well, as the CEO of Shockworks, I can weigh in on that directly. What we'll do is we will leverage the bulk of our partner base. We will leverage the bulk of our teams, strength of our teams, and we will bring in our domain expertise in innovation, execution, and hopefully disruption. So what does that all mean to shareholders? Look, we're playing a long game here. What we want to do is we want to truly execute on the promise of tokenization and the future of work, the future of recreation, and the future of living. So by that, we're going to be, and we'll talk about our roadmap in the next question, but by that, we're going to bring all our execution capabilities. Our track record speaks for itself. Our partnerships speak for themselves, and these partnerships will become revenue drivers where we merge the digital and the physical. So our objective here in this partnership is to merge the physical and the digital through Metrospaces, through Shockworks. And yeah, that way, hopefully our long-term holders will benefit and gain. We also want to create the most compelling product for our users. So we haven't really talked a lot about our users and our early adopters, but we want to cater to them because they will be the largest drivers of the success of our company. So that's why we want to encourage all of you, and both investors, we want to encourage our investors to become our adopters and our users, and vice versa. So in this case, we want to bring you guys to our betas. We want to hear your opinion. We want to provide the most transparent offering in the market by providing a real-time PMS where you can track the assets that you buy. And then we'll talk about less dilutive sources of financing, like an STO that is down the road. We just want to make sure it's perfectly compliant and we can target US persons, but that's down the line. Moreover, we have, a series of assets that will be tokenized that will also get real-time feedback that can be tracked through our PMS. So we want to have a two-way conversation with our investors, with our users, and grow based on their feedback.
That's exactly right, Alejandro. You hit it right on the head.
Cool. So then, okay. So now let's get into the roadmap. Let's talk about what we have near term and what to expect. So why don't we talk about the corporate roadmap in addition to the product roadmap? So what we could do, Oscar, is maybe you talk about the 6 to 24 month roadmap in terms of the company, and then I'll talk about it in terms of the product from 6 to 24.
Absolutely. So, I mean, obviously, our short-term goal as far as the capital structure of the company is to completely shift into much cheaper financing. Okay, which is market-based lending. Equity partners that bet for the long term, not convertible structures. That's very important to us in the near future. I think having access to better capital will definitely give us that access to the capital that we need to grow this at a much cheaper cost, right? That I guess is a simple, in a nutshell, what we want to do with the balance sheet. As far as where I envision the company corporate wise and all those things. Look, we're big dreamers. Like I said, we don't want to start offering names of markets or this or that where we want to list. But it's obvious, people can guess into what we want to do. I mean, we see ourselves to be a multi-billion-dollar company because we're gonna be a big player in a multi-trillion-dollar industry. And again, we keep talking about the convergence of your expertise with mine. So I that's just how I see that this is gonna go forward. It's difficult to assess as far as who we're gonna be in 24 months because frankly, the industry is moving so fast. We're innovating, and I think the things that we're talking about, we're all going to do, but we have no idea what we're going to be talking about in the next 12, 14 months. 12, 18 months. So, for me, it's simple. Okay, I don't want to oversimplify this. I think we just keep executing on what we have on the two platforms that we have. The couple other things that we've hinted at that are going to be sort of like our phase 2, if you would. And then frankly, the way I see it, we'll go from there, just be very, very open, very with our eyes wide open at what's going on. We're always benchmarking against competition. I feel very good about where we are, both in the co-living segment and in the in the tokenization segment. And then after those things are launched, obviously there's still going to be a lot of more work to be done. But PropTech is being defined, and you and I, our group, Shockworks, Metrospaces, and the combination of both, we're going to be one of the players that are going to be redefining it. So I like talking about more general terms because and it's very difficult to set a plan that actually happens. I mean, you and I have been businessmen for way too long to know that any business plan you put together is worthless 6 months down the line, you know. But it is a path forward, and this is it. This is what's our business plan?
Sure.
It's prop tech.
Yeah, and
nothing less
honestly,
than that.
yeah. So I can actually let's speak. We can speak concretely near term. So six months. However, you know, I'm a firm believer of the adage that the best way to predict the future is creating it, and we're early stages in prop tech. Therefore, what we want to do will be very concrete in the next 6 months, but 24 months, we want to be the main drivers and of the conversation of where the future of tokenization, where the future of real estate technology is heading. So we want to be the drivers of that force, of that conversation. We want to have our PMS and our exchange actually become a market leader that defines the future of the industry. That is our vision long-term down the road, 24 months from now. We want to be the guiding company, kind of the guiding standard in where the industry is heading. Now, 6 months down the road, we want to fully pivot into a prop tech. We want to launch a successful beta that captures the essence of what users want and need, right? So that we can really iron out and execute a product that can build out a user base that then we can use to build on our asset pool, build on Metro Crowd, build on all these concepts, make them cumulative, add more revenue, and really become the drivers of real estate technology and steer the conversation in 24 months. That's where I want us to be: market leaders, thought leaders, and steering the conversation. So we're the ones who want to frame the discussion. We don't want to be reactive.
That's exactly right. Create the future, Alejandro. I love that phrase, and I think the same way. We've shared this thought many times.
Perfect. Well, look, I think this was a productive segment. We'll pilot more direct comms initiatives with our shareholders and our early adopters and our users. We thank you guys so much for all the feedback. Again, we want a committed user and investor base, but we also don't want sycophants. So your constructive criticism is always welcome and will always be addressed. So thank you again for all the participation, for all the valuable feedback, and we'll look to include you even more down the road. Absolutely. Thank you, everybody, for watching. Thank you for your feedback. Alejandro's saying it, I'll repeat it because it's a really important part of our business plan. We love all sorts of criticism, constructive, even negative, because we learn from all that. So, keep it coming, make us better. We love it. So, and we consider you all part of our story. So please be active, be proactive, and let's do this together. It's a big lift that we have here. And also, let us know if you'd like to participate in our beta, drop some comments. We could even talk about creating a hashtag included in our Thursday's thoughts, but we would like to get early adopters. We would like to get you guys live in our beta so we can start really cranking this out. Thank you all. All right, guys. Well, thank you so much. Thank you, Oscar. Again, thank you for inviting me into this journey. And thank you guys for all the confidence. Have a great weekend. Likewise, Alejandro. I'll see you very soon personally. All right. Cheers, guys. Take care.